Today we find ourselves at the beginning of chapter 9. This is going to be the introduction to what we're going to talk about during this time. We're going to talk about the stock market, what it is, how we create wealth, and also the whole concept of entrepreneurship. This is going to go into a career focused research project or essay reflection that I'm going to have you work on to figure out what is it in the future and how could you be better prepared based off of what we've learned throughout history. So, the first question I have to ask you is why do people start businesses? Is it because they're not happy with the regular job that they have, or perhaps they have a style of learning or something that they're very very good at that they'd like to share with other people, and they think that that's going to be a good way to create money? The reason why we do create businesses is because we want to create a living. Besides that, we also have the stock market, and the stock market is a system of buying and selling stocks in corporations. Again, this is what we look at from the perspective of to invest in companies now so that they can create more jobs or more opportunities through research. Owning a small portion of a company to make sure that they are solvent through, and then also to get money back in return. We talked about this from the perspective of the Roaring Twenties in the last chapter. You saw a lot of people who had that extra wealth was able to put money into the stock market as a way to say, hey, we're always going to make good money. Under the last few years, we've seen the stock market rise very quickly. And obviously with what's going on right now with the COVID 2020 crisis, we see stocks starting to fall. The reason why we get in the stock market is because we want to make profit. And the concept of profit, this is very basic. It's when you make money in business. It's called a profit. Mathematically speaking, its profit is the revenue minus the cost. So all the money we make out of something minus all the expenses that we have in it. For example, you could buy an iPod for $250, and if you sell it for $300, then you're going to make a profit of $50. It's a quick way to make some money in small aspects. But again, a lot of those things we'll talk about once you get to economics in the 12th grade is about the amount of time, the amount of labor, and things you put into it to make sure that you're actually making money. The purpose of business and the purpose of entrepreneurship is realistically to do the least amount of work and while getting the most amount of benefit out of it. But even with entrepreneurship and with the stock market, there's always a fear that you can have some risk, which is loss. This is the risk that you will lose money. With what's going on right now, obviously with all the closures, I know personally with owning a restaurant, having that ability, the inability to sell my product is showing me a loss. So meaning how long can I sustain that until it gets too bad, or can we sustain it during this tough time? So how do you raise money to start a new business? One way to raise money is to borrow money from a bank. This is a loan, and this money has to be paid back. This is kind of like the whole concept of either we have money, we have wealth that we've accumulated from other jobs and other professions, or we start small. I think of, when I was young, following like young Dante in our class, my first business that I did was cut grass. My parents gave me a nice cheap lawnmower. I lived in the south side of Pittsburgh, so a lot of people had small yards where I was able to go through and just cut grass, $10, $15 a pop. And that money started to come up with a little bit of collateral. And after that, I was able to go through and buy another lawnmower, buy a weed whacker, buy a bagger, and eventually buy enough goods or products that I needed to make the money that I was able to reinvest it in, grow my business, and in that sense. With stocks, you can also sell ownership in a company. And this means that you have other people give you money and they have the share of the profits and losses of the company. These ownership shares are called shares of stocks, which means most companies that are publicly traded offer you the opportunity to buy into them. Up there, this picture of a stock from the Walt Disney Company, which means we could go through and try to buy shares of that stock, and it's based off the price of that day. A bull market, this is a very big symbol of what you see, a long period of rising stock prices, which means that the stock market is truly working for us, working and creating wealth and reinvesting, meaning that every time people come in and buy the stocks, the value of the stock continues to go. So if something's very popular, something comes out that's really hot, I look at in the last couple of years Tesla as an automobile, the electric automobile company. Tesla came out very small, but because they've made so many advancements, the value of the stock keeps going higher and higher and higher, which means that the value of the company is growing higher. So if I bought a stock for $300 a few years ago, at its peak, it's been up to about $930. So over that course of time, I've actually made money, and the company has grown in value. If you own shares of a company, you can sell them to people in the stock market. One of the most common one that we talk about is the New York Stock Exchange, the NYSE. This is on Wall Street in New York City. So stock prices. When a company is doing well, more people want to buy the stock, and its price in the market rises. When a company is not doing well, more people want to sell the stock, and its price starts to fall. Now, when we're looking at introduction of stock market, here's the rule of thumb when we talk about this. And in the future, if you want to join my club, which is the Stock Market Game Club in the future, what you see is you want to try to buy stuff when it's cheap, and you want to sell it when it's high. Meaning that if the stock keeps going up and going up and going up, you really want to think twice before you buy it, because is it going to give you the amount of risk and reward that you want to? And again, when we get to the stock market game, when you get a little bit older or to 12th grade, we'll talk about the different types of stocks that are out there that are a little less risky than others, and the different way we can buy it and create a portfolio. So some of these vocabulary terms as we're coming into chapter 9 that I want you to know about is speculation. And this is the act of buying stocks at a great risk with the anticipation of that the prices will rise. So it means that we think it's going to go up, so we want to buy it now. Margin, buying a stock by paying only a fraction of the stock price and borrowing the rest. Obviously, I had a spelling mistake there, so I'm going to fix that up real quick. So when you buy on margin, it means that you don't actually have the funds to go and buy the product. You're going to borrow the product there, so it's kind of a false sense of wealth, meaning that if I want to buy a $100 stock and I only have $30, but I buy the $100 stock, I owe somebody $70, which would probably be a bank. Now, I know that's a very basic concept because it's going to be much larger, but what happens if that stock goes below the $70? Not only am I out my $30 that I invested in originally, but I also owe the bank that money. So buying on margin is very, very risky. Well, another vocabulary term is margin call, and this is the demand by a broker that investors pay back loans for stocks purchased on margin, meaning that if they see the stock prices start to fall tremendously, there's a little bit of fear that you're not going to have the money to cover it, so they're going to call in and say, hey, we need this money back now. So part of this first thing, and I want to get back into a little bit of normalcy of school, but I wanted you to look at this from the perspective of, I'm going to give you an assignment here, and it's going to be listed on Google Classrooms, and I'll explain this to you. I want you to this week, and today's going to be Thursday, Friday, Monday, Tuesday, Wednesday of next week, I want you to each day look up and graph the stock prices for two companies, Pepsi and Coca-Cola. And what I'm going to have you do is I want you to compare the prices each day to figure out which one makes the most amount of sense to invest in. One might be sitting a little bit higher than the other. The document is already created for you and the chart is there, so we will be able to go through and work on that. So again, this was an introduction to what the stock market is and what entrepreneurship is. As directed by our principals, they want us to do a little bit of an assignment, which is basically a career research assignment. And the question that I'm going to ask you to do is I want you to look and see is what is the benefit of being an entrepreneur? Meaning, is there a benefit of working for yourself and creating your own company? And if you're not interested in that, number two, I want you to look at the stock market and talk about what the stock market is and why would it be a benefit or not in order to sign up and to purchase stocks as a long-term way of making money.